record. So meaning this was a very good double top. Okay, a very good reversal pattern. So from there, one would have seek for selling possibilities. All right. So that is what we do. On a daily time frame, we just draw our trend line, draw our levels where we see necessary so that we can top down the analysis into our entry time frame. So we go to a 4 hour time frame. We go to a 4 hour time frame. At this particular level, we can see um, a rejection that took place twice, at least twice. A rejection, a first bullish rejection that tells us the bulls are no longer interested to go in that direction, and then the second bearish rejection that signifies that the market is actually turning into a downtrend. All right. So one could have sold from there, put your stop loss above the resistance, and swing traders would be holding up to this low, or at least up to that level, up to this level. Okay, so
Mhm.
this trade would have only been closed today. So all this, maybe we were supposed to hold it for quite some times. So only today we were supposed to close this trade. All right. Had we not seen that, because we didn't, then we would have seen an insurance entry where we have our flag, our bearish flag. Very beautiful, very beautiful. We have our bearish flag here, and we were supposed to wait for the market to close bearish before we can actually sell. So which it did in this 4 hour time frame. But it's always good to go on the lower time frame to see the clear behavior, a proper behavior of the market or price movement. So we can see that very well. We can see this very well. Exactly the same repetition. We call it override when we see a double top, a triple top. So the double top was formed because the third touch was never, the market never touched for the third time. So there was this. So this would have been a very nice entry. That's an engulfing candlestick pattern. And then we should be selling. We need to be very technical about this. So we look at this distance, the distance from there to there. So that is the same distance that we should be selling. So this would have been our take profit. We put our stop loss there, our take profit should have been there. Okay. So had we not seen this opportunity, I'm sure if we look through this, we will see another opportunity. But let's not look for that now. Let me just quickly put this one back. A stop loss there, and then take profit there. Okay. Then our best setup that was confirmed. I completely forgot that this VIX 25 is the instrument that we're trading earlier this morning. So let me remove everything. Let me remove everything. Because we can see it's a downtrend. The market is going down, so we are only looking for possibilities to sell. So one thing that we that would have given us a clue is this level. We see this, the market is at that level. It broke through that level here, retested that level there. So that is why the market went down. Okay, we know that a level that serve as a support and it also serve as a resistance is a very, very strong level. Okay, so our entry, the one we got this morning, we got it on a 15-minute time frame. We got it on a 15-minute time frame. Okay, so this is our hook. This is our hook point. Okay, that is our hook level or our resistance level. So then we can see double touches there, the double touch. At the time, price did not come to liquidate that hook. So it was, but what we saw is we saw price breaking through that level. So this is, we found that price today at that particular level. So we found price breaking through this level and retesting that trend line. So we believed that it was going to sell, and it did. It did up to that level. Let's see. Okay, it did up to that level. All right. We consider our first take profit was there. Our first take profit was there. If our first take profit was there, so and then our second take profit was there, so we would have, yeah. So maybe some people might have not held up to the second take profit, but at least you must have benefited from up to the first take profit. When you use a big lot size, so what I do is if I have a small account, when I cannot use a big lot size, what I do is I back out, I put in as many entries as possible when on a very smaller time frame, when the market is already moving in my direction. Not when the market is moving against me. When the market is already moving in my direction, let's say if like this push, when the market is moving like this, I'm already putting as many entries as possible. So the good thing about with an iPhone, you can just click and then it will give you as many entries as possible. Okay, with a small lot size, and then that is how you are able to make to make much. But it can only be done if you are very experienced enough. If you are still learning, I'm not advising you to take as many trades. Put one or two, three, or two or three, uh, each with a stop loss and the take profit. Okay. Now this one, I missed this one because I forgot that we traded this move earlier. Had I have known earlier, we would have also benefited from this at the early stage. So look at this. So what happened is that the price just came to give us a third touch. And this is our golden pattern. First touch, second touch, and the third touch. This is our golden pattern. If we see something like this, we ought to take that trade, and we take it aggressively as we can. Okay, so that is why the market the market moved in that direction. Okay. So it was supposed to come at least to that level. It was supposed to come at least to that level. It was supposed to come at this level. But obviously the market can decide, especially you see this low. This level are very, very significant. These levels where the price reacted before, it becomes very, very, very significant. So if a price reacted before at this level, it is likely to reverse, I mean, to react like what you can see here. But what I'm also seeing this with this particular trade, I'm sort of seeing an inverse head and shoulder. Yeah, so I'm sort of seeing an inverse head and shoulder. So this is our head, that is a shoulder, and then that is another shoulder there. So if it closes bullish, we're within an 1 hour time frame. Uh, Within an 1 hour time frame, it's probably like to go up before it comes down. Before it comes down. So it's likely to go up to fulfill this head and shoulder pattern, maybe up to where it came from, before it can even just end there because this pattern is within a downtrend, so it's a bit tricky. If it was on an uptrend, then it would have been much easier, but it's a bit tricky because it's on a downtrend. But a buy, especially for some people that like to scalp like me, um, had I've seen this level earlier, I would have also bought from there. So I would have also bought from there. Okay. I would have bought from there. Yeah, but this can still sell. It can still sell because the momentum is down. But it can also buy um, and come back to this low and still come back to this low. So those were the two trades that we took this today. I think they are very successful trades, very successful trades. Though the initially buy that was given only ended only ended up to there, and then the market reversed. Okay, so but it was still a very successful trade for those that might have taken it. Is there any question with regard to this setup? Any question?
Nope, not from my side.
Yeah. So we need to master. If you master this setup, ne, the three touches
Mm,
are very important. This one, two, three. These three touches are very, very, very important. The three touches are very important, especially when it is now, it is accompanied by this hook level or a high above there. And the
mm,
market comes back to that high or at a resistance level. It just a hook point is just a fancy word. So it's
mm,
just a high or a high or a high low, something like that. So especially if these three touches are accompanied by this high, that becomes a very quality setup. And also it has to be in the direction, in the overall direction of the market. Like we can see, the overall direction is bearish, and because it's
mm,
bearish, the this setup worked better. Then it would have had this was a bullish. Had it, I mean, So this setup worked better because it's bearish, but it would have failed if it was a bullish market. It would have failed if it was a bullish market. So I can
mm,
still see this market going down. I can still see this market going down. So yeah, but one of the reasons really to believe that this market was going to go down is just to see the overall structure of the market. You see, overall structure of the market. Overall
mm,
structure of the market, we can see that it's a double top, and the market is yet to come and give us a third touch there. So it gave us a first touch, a second touch, then it must give us a third touch before you can buy, or
mm,
it can give us another third touch up there. We have a first touch, a second touch. It can give us another third touch from there before it can sell again. Okay? Three touches are very, very, very important. Very important. Really, really, really important. Okay?
mm,
So that's why we need
mm,
to be aware so that we can benefit from that. Um, we also had a focus on VIX 10 first that has violated everything, because if you see properly, let me remove this one. If you see properly, okay, a similar setup. If I remove this line, I remove that line. A similar setup was shown here. One, two, and the third touch. If I zoom out, this third touch is the one that formed this evening star. So we were counting on this evening star, but price is very dramatic. It did what it does best, to go wherever it wants, and
mm,
it ignored the evening star. And we need to understand why that is the case. We need to understand why, because we were looking at the reversal. We're looking at the reversal. So the market, if I can go to a daily time frame, okay, the market is forming low, lower, high, low, and then high, high, high. And then the market is likely to form another high there. So probably the reason why the market is still bullish is because it's an uptrend. Yes, it is an uptrend. We're looking for the reversal, which we did not see. We could not see. We didn't see that. We didn't see that reversal. So it's probably that the market will reverse. It won't even reverse from there, because it also passed through this level. It also passed through this level. We can change this pattern. We can change this pattern to this one, or even this one to that one. This one, if we change this one to that one, okay, price already broke through that one, so that one is invalid. So we are likely to wait for price to come there. Very likely to wait for price to come there. Okay, then we have a first touch, second touch, looking for the third touch, and then we have a first touch, a second touch, waiting for a third touch. So price is unlikely to break through this level, through this trend line. without coming back. It has to come back. It has to give us a third touch there. Comes back down. It has to sell to give us a third touch there. So it will not be instantly, but it can even take a week just coming down here. So it's a very beautiful setup. Our golden our golden setup. We have our first touch, second touch. Um, we missed the override. There's no override there. There's no double bottom there. There's no double bottom. So we are expecting one, two, and the third touch. When that third touch comes in, then we should expect to sell. We should expect to sell up to that level. It's still a downtrend. I mean, it's still an uptrend we can see. Even if I use my moving average, we can see that it is above price. Let me check 50 moving average, 50 moving average. So it's above, price is above the moving average, giving us a signal of an uptrend. Price is giving us is above the average, moving average, giving us a signal for an uptrend. So even if you use a 200 moving average, it still shows that price is going up. So it's not strange that the market is going up. It's not strange that the market is going up, but we just need to understand the psychology behind it's going up and where we are likely to catch it. So we are never sure where the market will turn from. That is why we are giving probabilities of possible areas where the market may turn through. Okay. So now everything else is looking at price coming to this trend line and turning from there. If we can see it coming from there, I'm sure we can benefit a lot from it. Is there any other instrument somebody was looking at?
Yeah, maybe 50. I think
VIX,
we had VX 50 at one point, maybe just to see where it is.
yeah, VIX
It
50.
was, yeah, VX 50.
Yeah, and we benefited from there.
Yeah.
I think we sold, did we, or did we buy?
Let
What
me
will-
quickly check.
what
Um, what was the we bought?
we bought, eh?
Yeah. And at one point at 128,
Mm,
I think it started selling.
yeah, okay.
So depending on where
No,
it is now.
actually, I remember now. I remember now. I remember now.
Mm.
This is where we were. We actually bought. Yeah, it was this. Yeah, but
Mm.
we benefited from this. I'm sure it's
Yeah, we
something
did.
we did
Mm-hmm.
benefit from there. Very nice,
Yeah.
beautiful one. A very beautiful flag there. A very beautiful flag. Three touches again. Um, if you look at that now, it's one, two, three, or you can say one, two, three
Oh.
touches, and then
Mm.
one would have bought from there, and then targeting that high, putting your stop loss there. So which we did. So and it seems like the market is still going up. Still, it seems like the trend is still going up. It's still going up. So let's see if it will continue to go up. Let me use my Fibonacci retracement tool to check the level. Yeah. So yes, this market is still buying because
Mm.
at 0.618, so the market will keep pushing up.
To go to that
Mm.
level.
Yeah, to go to this level, to go up, to
Mm.
go up.
to the
So yeah,
previous high.
yeah, the previous high. So and
Yeah.
this one is also very, it's very nice because again we see our three touches: first touch, second touch, and our third touch. So that would be our third touch. Okay, that would be our third touch. One, two, three, third touch. This one is a very strong bullish momentum because after breaking this high,
Mm.
this is our break of structure. Then we had this hook or a resistance. If you look at that, we had that hook. The market came back to that, and this level intersected with our trend line to give us a very good possibility of buying this market. To give us a very good possibility of buying this market. So this was another beautiful one. Was another beautiful one. I think we should be monitoring it. It's another beautiful one. Again, if we go back into identifying our touches, we have, let me just quickly check. We have that touch and that touch.
Mm.
That is our first touch, our second touch. Then down there we have that touch. Okay, we have our first touch, our first touch, our second touch. So it's a very good setup because it can give us the possibility either of coming to give us a third touch from there and then we buy it again, or it can go up to give us a third touch from there and we can sell.
Mm.
And we can sell. And this level coincides really with market structure. It's a downtrend. If the market
Mm.
comes at this level, this you can just see where this level is. Let me just quickly show you. If the market comes there, there was price reaction. There was price reaction there. There was also another reaction there. There was also another reaction there. So this is a very good level for price to change direction from that level. For price to change direction from that level. So every time you look for your third touch, you get your third touch, you are likely to get a good possibility of a trade, a very good possibility of a trade.
Yeah, thank you. That's all I had.
Oh,
Oh,
all
I
right,
was
ma'am.
following. Yeah.
All right, ma'am.
Mm.
Um, 100 first is one of my favorite. I didn't look at it, but yeah, it's one of my favorite. Look at that, beautiful. Another beautiful one. So we see this high. We see that high. Okay. We see that high. The market broke through that high. Okay. We also see this very, very, all you do is to look at your lows, your highs. Okay. We see that one, two, three. Third touch. A very nice one. We would have sold there. Okay. So that was beautiful. We can also connect these two, one, two, three. The market never came to that. So meaning there's a gap there. There's a gap in the market there. If you also connect these two, that is why the market also turned from there. So it's a one, two, and then that level, though the market, this is just manipulation. So this level was also rejected and it coincide with this level liquidity, this liquidity it coincides with this liquidity grab before it actually pushes down. So it is likely to push down again, or it is likely to push. So what I like to see is I like to see a flag. If I don't see a flag, if I don't see a flag, then I don't think it's a very good trade. So if I go to 15 minute, I should be able to see a flag. If I don't see a flag, it doesn't really convince me that much. This level, I don't see much of a flag. I don't see anything that looks like a flag. So it doesn't really convince uh, me very much to be able to take that trade. Okay, so yeah, we can end here for today, and then we continue again. Tomorrow is another trading day. If you didn't make any money today, don't worry. Tomorrow we have another day. It's very powerful. So I'm on the chat 24/7. So yeah, let's see how it goes.
Yeah,
No, thank you.
definitely. Thank you
Yeah.
very
Thank you
much.
All right.
for your time.
Yeah.
Bye bye.
Good evening.
Bye.
Good night.
Good night.
Bye.
Bye.
Mm.
My goodness. The hook, the 340. It is such a beautiful.